You know, one of the worst feelings to have as a trader when you place a trade, you you've done all the analysis you can do. You've been stalking this pair like all night, waiting for the all for days, waiting for the right chance to enter, only for you to enter and you get waked out and it goes in your favor, or you miss the trade, or any of those things. Definitely annoying, definitely hurts, and I know how that feels. Does it mean there's a possibility this will never happen to you? No, you will definitely experience this. Every trader will definitely lose, but are there ways to reduce this happening? Sure. So I'm going to share tips on ways you can avoid that. We'll be going to the chart in a short while. Before then, if you're new to the channel, welcome to Aya Trades. We talk about relatable topics for traders. Basically just give you my insights, give you from my experience. I'm equally trying to grow as well. So let's grow together. Subscribe, like, drop the comments when you're done with the video, and let's get to it. So guys, we're on the charts and I'm just going to randomly scour through to see what I can spot. So I'm just going to do this search. I'm not going to really cherry pick, but now you are trying to enter a trade and let's see. Let's say okay, I want to sell. I wanted to be on this sell down to this place. This is AUD card. Is it where I looked at earlier, if I'm not mistaken. I don't know if it's AUD card or New Zealand Canadian dollar. But basically, let's say we have this context. Let's look here and see if there's anything interesting here. Okay, so I will just start off. Tip number one: you should always want to be in line with at least the weekly order flow, the weekly direction of the market. So what does that mean? If you look here, you could see, sorry, I'm not with my mouse, so I'm actually struggling a bit. We have taken out this high liquidity. Price only does two things: seeks liquidity or fair value. So liquidity has been taken, we have this fair value gap here, and the previous week we were bearish. Like, this is a very bearish candle. We swept the other week's high. So I could argue and say we are heading lower, but I will confirm that with what happens on the lower time frames, at least like maybe the 4 hour. And here we can see we have bearish fair value gaps. We used to have bullish fair value gaps. Now that there's a failure to create a new one off of this one, turned bearish. We're now having bearish price action. So I think I took my trade around here. Around here also. Yeah, because it was last week. Yeah. It's just last week, but I already forgetting. So now, why did this trade work out? We had this bearish price action really tipped to me that we should go lower. So, as I said, you need to have your trades in line with the higher time frame order flow. Like, imagine you're coming to buy here. The price go up to here, yes, but this is like on the 4 hour higher time frame. But for me, I would say at least the daily, at least line up with the daily. Before it goes up, you could face like high resistance price action. You want the easy going one. You see how easy it was for price to go down. You see how easy it was for price to go up here. So that's what you want. From this 4 hour, I personally entered from the 1 hour here, and I think my entry was here. This fair value gap from the 4 hour, we have a 1 hour fair value gap. Even if you entered on the 5, you found an entry on maybe the 5 minutes here. I should mark. Let me mark that. Even if you have an entry on like the 5 minute there, you will probably be lucky. Like, you would be able to find something. Yeah, this is the issue. Give me a sec. Now, I think the context low for that 1 hour fair value gap was yeah, this is why I don't like going to the 5 minutes, because it's a whole mess. But basically, if I entered from the 1 hour, I would enter there, stop loss here, then I can aim for lower, typically a 1 is to 2. Since I had the 4 hour fair value gap and we had the weekly drawn price, I had more things in line with me. That's why it was easy. Then for number two, the second thing that you want to have on your side is trading within the kill zones. Like that is where, unless you're like a huge swing trader entering on the 4 hour, even from the 1 hour, you don't really need it. But for those of us who trade on the lower time frames, I do sometimes, but on different asset classes, not on forex. I used to do that, but not anymore. I like my peace of mind. Um, Entering on the 5 minute, entering on even the 1 minute, you need to really enter inside the kill zones. You can see I have this, I have them marked here. You can see Asia, you can see London, you can see New York, you can see London close, and so on and so forth. So, because why? Because you need the volatility. You see, that's inside the kill zones are where like you mostly have volatile price action. You don't want all this choppy price that comes outside, and you also would like ideally to have the pair you're trading. You want to have news on that pair. It's good. It's good to have that on your side too. Why? For volatility. Not for the big three news events, please. Not for NFP, not for CPI, not for FOMC. You don't want to trade before or during the news release. You want to trade only after them, because price tends to be choppy when they haven't yet delivered. So as you can see, if you have price higher time frame price action going in your direction, if you have if you are taking your entries in during the kill zones, if you have news on your side, those are three things that would definitely up your game and make your entries better. Another thing that will help you make your entries better is having an actual entry pattern and sticking to it. People can have multiple ways to enter, but as a beginner, please just have one. Now, some people enter with breakers, some people enter with fair value gaps, some people enter with order blocks. Have one, just use one. It's better you have one. Then imagine if I come here and I want to take a shot of this leg, and I have this breaker. I'm like, oh, there's this breaker block, price close bearish. It disrespected this low. It didn't respect the low. Oh, I could just enter. From here. Where would I? For instance, enter from here. Put my stop loss. What would I do? I'm like, this is too big. You put my stop loss just here. Price should just go. Then I put my. It's just 1:2 I'm going for, right? It should be easy. But then you can see what happened, because I know how it is. I know how we can be sometimes. We will not just follow through with our rules, because you'll be like, oh, this is a very big stop loss. Before I even get 1:1, it's like, it's already 40 something pips. I don't want that. I want to be in and out. You now maybe go the lower time frames to find something to convince yourself. You don't want to do that. You don't want to do that. If this is how you want to enter, yes, you can do that. There's nothing wrong with that, but you have to follow the rules. You have to play accordingly. It will take you a long while, but you can see eventually in hindsight, CP will get hit. You get what I mean? If someone might choose, okay, I want to enter with fair value gap. Someone will be like, I want to enter with the very last extreme order block, like this one. This whole from here to here is the order block, because price has traded above this, below the low. Is a valid order block even with a fair value gap. But someone might want to use the most recent up candle here. Did it get there? Yes, it did. Fantastic trade, right? Fantastic trade. If I draw this, I'm not going to be able to hold shift. What's going on? Okay. You see the way that is 16 pip stop loss, 1:2 ish. Wow, fantastic. So this guy might be having a very good day right here, because he got like good cool sniper entry. tight stop. But then again, those guys, they can also make straight. I'm looking for a scenario. Okay, let's say this one. We have this price swing here. Um, there is no fair value gap here until this 1 hour fair value gap right here. So I would have said, okay, it could be something on the higher time frame, but it's still valid here. And my guy still marks this order block right here, and he waits, and he waits, and he waits, man. He's probably still waiting till today because it never came. He would have been in and out, but the guy who trades with the fair value gap would have gotten in there, and he has had his one. I don't even need to draw this, but I'm going to do it. He has had his 1:2 and he's out. So, what point am I trying to make? Every entry pattern has its pros and cons. You just need to pick the one that works for you. You need to pick what works for you. You need to stick to it. Then, with experience, with time, you can be able. When you've made withdrawals, when you're profitable, you are in a better position to now be to now like try a little more different. You don't really go out of your plans, but you can add more because you have more experience under your belt. You're more seasoned. Unlike when you're just starting off, you want to now do everything. You want to be jack of all trades. No, it's not going to work. So guys, I'm going to wrap this one up here. I hope this video was insightful. Please let me know what you've learned. Let me know if there were other things suggestions you might have. Even for me, I mean, I'm always willing to learn. I'm always willing to add more things to my belt in terms of experience, not more PDREs. I do not want that. So thanks for sticking around. I hope this was insightful. Stay consistent, guys. Before you go, leave a like, leave a comment, as I said earlier, subscribe, share, and join the club, man. If you're not here, you're missing out. Trust me. You might be like, why am I missing out? But trust me, you're missing out. So there's a link in the description for my Telegram channel. I will drop in tips and insights on the market weekly. Do take care, guys. See you soon. Peace.